Afternoon, everyone, and welcome to this market update. Today, this Wednesday, 25th of March, 2020. Now, start here with Forex, as there is a fair few pairs I'm currently watching, or just for quick pullback plays on the daily chart, as they don't have any, remember, bullish price action. So trading bullish to the upside, quick pullbacks because there's no double bottoms or higher low on the daily time frame, and just looking for those wave 2 or wave 4 pullbacks of the Elliott wave count. So start here with Aussie yen. You see price fell down, now it's broken up, made this higher low, previous low, higher high, and I'm looking for price to come down, reject the 50 EMA, 0.382 fib, and I'd be looking for a rejection and a nice 5-minute break and close of this 5-minute 50 to then a quick long to the upside. Now, if we look at the higher time frames, you can see here what I'm saying. The daily chart here had this bearish run, this rejection here, exactly on 59.900. Beautiful whole number, psychological support. You can see on a monthly there is some previous support there. However, there is also support lower. And if this economic crisis in Australia continues, I would expect this just to be a pullback and then for the Aussie dollar to continue to weaken against the yen. Now, one negative you can see here, it's already holding the 20 EMA or at the 20 EMA, and it would be ideal if price wasn't right there yet, as that means that there's a bit more room to the upside before there starts to be any resistance that push against the price. Remember the path of least resistance. You want to be trading that direction. The more resistance between where you want to enter and your target, well, the lower the probability and the longer it may take for price to get there. So you can see it's at the 20 now. It has no double bottom, no higher low. So that's a negative. In saying that, could we see a potential pullback further, deeper to this 50 EMA? Potentially, as it has had a quite significant drop here. So something I'm keeping my eye on, and I will determine it simply when I see how price reacts around this level. And what I want to see is a nice rejection candlestick closure with momentum to the upside. That will give me the confidence to potentially take that little bit of risk and push it through the 20, targeting that 50 EMA there for, I've got it drawn up here around 3.5%. So by the time price comes down here, it'll pull the 50 a bit lower. By then, decelerates a bit, which continues to pull it down. So a break and close roughly around 3 to 3.5% potential. So that's something looking pretty nice. I'd expect it to develop. London opens in an hour, New York 6 hours, so any time probably within the next 5 to 6, but it'll probably happen while I'm asleep. So that's Aussie yen. Now a couple of quick other Aussie pairs I'll touch on here. Aussie CAD, same thing. There's bearish movement. Now it's starting to make higher lows, low, higher low, double bottom. And it broke up here, clear higher high, previous high. So I wait for it to pull back, see how it reacts, rejection, wait upon it a rejection and look to push that for around 2%. If we look at the higher time frames, look at the daily chart, same thing. Today you see price, it's in maybe the third day of this run here, because this candlestick, yes, it was bullish, but it closed pretty much almost exactly where it opened. So 1, 2, this being the third day, a little bit of room up there to the 50, and you can see it's already looking to like it's breaking this 20 EMA there. So that's something you could also take into consideration for this Aussie Yen pair. Right, Aussie CAD did it, and if we look at Aussie Swiss being the next pair, it's approaching that 20 EMA as well. You can see that Aussie Swiss went to extreme lows and actually made a lower low, the lowest it's ever made, 53.4. So this is something I, once again, would prefer a higher low or double bottom to give me that confidence that there's further bullish price action. But once again, looking at Aussie Swiss for a quick pullback play as well. And if we look here on the intradays, similar thing. See this bearish movement. Failed to make a lower low. Trend starts to change there with this confirmed higher low, previous low, higher high, previous high, came back, and now then it moved sideways a bit before breaking up. Bit of a messy sort of price action, but it is a continuation of this bullish trend that you can see here. So same thing, looking for this pullback, rejection of the 0.382 fib, 50 EMA region on a 1 hour chart, wait for a bit of deceleration, like to see a nice rejection, and targeting well around that 20 EMA region as well, potentially pushing it to the 50, wait and see. Now, a couple of other pairs. So those three are ready to go in red. This one, Aussie dollar, similar sort of thing, except I'd drawn this in earlier today, which would have been an IBOC potentially, except an IBOC technically is a rejection of that 4 hour 50. I'm not sure if you'd call that a rejection, as it didn't quite really touch it at all. So high or low, maybe an IBOA. So Aussie dollar is this one. When we look here on a daily chart, because you've got to think, how much room does it have for that pullback to happen? You can see this, it's got even a bit more room to this 20 EMA before it touches it. So what's this? Say 618. Put 618 here. $618 with the stop loss. You could tighten that up a bit because it has a higher low here confirmed on that 4 hour, which further gives further bullish confirmation. Remember, higher low, higher high. So wait to see what happens here. Potentially, if it's already broken this, it could come up higher before pulling back, and at that stage, the daily 20 would be forced to, it would be pulled down lower. The longer the price takes to play out, bring those moving averages with it. So that's Aussie dollar. Now, euro dollar, I took my profit on this advanced breakout yesterday, on this break of the 5-minute 50 to the downside. You can see here where my cursor is, it didn't quite get to my target. Came up there very close, and then I don't really like to shut things down, so what I did before bed, I just moved my stop all the way from break even, just below these previous lows, and I was happy that if price came down, I'd be stopped out for 1.9%. So that was a pretty nice little trade there. I'll take profit. I'm not going to hold it if it was only another 0.5%. Next, pound yen. Same thing, quick pullback play, targeting around 2%. Once again, we'll look here at the daily 50 as it is a pullback play to see how much room there is to the upside. Right? So you can see here, once again, prices come down to these monthly lows. Also weekly support there and some daily support. A bit of a region, a bit of a zone. You can see 1, 2, 3, 4, fifth day into the run. So I wouldn't want to be targeting any higher than the daily 20, as once again there's no higher low or double bottom. So that's pound yen, around 2%. Kiwi yen, 2 and a bit percent as well. Quick pullback play. 20 EMA already, so not so good now. No double bottom, higher low. Now, one thing you can see here, it gave this higher low on a 4-hour chart. Because of that, it hasn't really, it hasn't given us a really good 4-hour rejection yet. Potentially could have entered in around here, but you see this descending trend line. At that point, price is still under it. So you're going to take the risk, or you're going to wait for that further confirmation of a break of it to tell you that it's going to be bullish. And in a pullback play, remember, the momentum is not on your side, it's against you. So in my mind, the more confirmation for a pullback, the better. If this was with the trend, I'd be willing to take a bit more risk with it, and maybe entering around there if the monthly and weekly were on your side, as well as a daily trend on your side as well. But as it is a pullback, remember, momentum is against you, so I'm not trading from there. I'm going to wait for that clear break, full confirmation, wait for the retest, and then look for a little quick pullback play. And also, got to factor in the risk to reward here. Right? For 2% or thereabouts by the time it develops, is that really worth that risk? I don't think so. 5% or beyond, potentially even 3%, but you add all those factors up, and no, I'm not taking that trade. So that's Kiwi yen. Another Kiwi pair here is Kiwi dollars. You can see this same sort of thing, bearish run, low, higher low, higher high. Oh, sorry, high. Now it's making this higher high. It's starting to push beyond these wicks, which is telling me that it's trying to push to make this higher high, and then I'll be looking for a pullback, rejection for a quick pullback play. Similar 2% sort of thing. So all in red, ready to go, but to be honest, most of them all need more further development, a couple more hours. Beginning of the day, they look better. Now this is dollar yen. You can see prices come up here. It's starting to be squeezed in this rising wedge. 1 top, 2 top, 3 top, quadruple top. Slowing down. London session opening soon, so we'll see what price does as an increase in volume. But I do expect dollar, as the DXY is showing a pullback incoming, so I'd expect this dollar weakness to have a break and potentially look to enter on a retest, targeting that 4-hour. I don't really want to enter it here, to be honest. I just don't like it, because it could break to the downside or the upside. So I prefer the price to give me a clear direction and then look to either go short or wait for something better to go long. And that's why you add the higher time frames to form your overall view. And if you look at this daily chart. It was bearish here, but as soon as it broke up here, it invalidated it. To me, that is not bearish whatsoever right now. Right? Not at all. We've got 6 days left in the month. Look at this monthly. If it closes like that, and remember, there's been 24 days thus far, or 25 now, without the London or New York session yet, right? And 25 days have started to show this massive bullish rejection, right? So that's 25 days against a potentially 6 to invalidate that and reject. Now, when you combine that with the month weekly, you see the same thing. Very bullish. If anything, I'd expect a pullback based on the dollar weakness, and then that bullish continuation due to the demand for dollars in this current climate and the overall price action. It's not bearish price action whatsoever across any time frames here. So I'm not looking for a short at this stage. I much prefer price to pull down to the daily around here and then look to get in to go with the momentum that it's currently showing me, as then the odds and probability are more in your favour. So that's dollar yen, and that's about it here for Forex. We'll quickly look now to commodities. Commodities based on dollar weakness, you can see palladium, platinum, copper, gold, silver, and oil have all had a bit of a pop to the upside. Currently in a long oil ETF. I loaded up on silver and gold, added to my spot buy ETF positions. I don't trade them just due to the fact that usually the spreads are too big, and yeah, I just don't really trade them, to be honest. So that's about it for commodities. Now I'm going to touch on these. We touched on these in market outlooks yesterday. So we'll look at this DXY now. This is what I'm saying. You can see price very bullish this month as we had the drop in the stock market. People sell stocks and they make them liquid and have a demand for US dollars. So it makes sense, right? And yesterday when we looked at the last recession in 08, 09 and the tech bubble, the same thing happened. Dollar strength was in play. However, you can see now, last couple of days we've started to stall, slow down, smaller candles. So I'm expecting a pullback, which further confirms dollar weakness. So any pair against the dollar, I'd expect to gain some strength. And yeah, so that's the DXY. Now moving on from currencies, I'm going to quickly touch on some positions I closed out last night. This is the first one on short the Russell 2000, which is small and medium cap stocks in the US ETF. This is an inverse ETF, just to get exposure to the drop. I took a spot buy back here in August last year. Ideally, should have taken it on this break of the 50, but I was already in. I was pretty happy with my overall buy and made a decent amount on that. Sold it at 42.47 and bought it at 25.94. Next, stock market short, same thing again, inverse ETF. Got in a bit tad early, and we can see now stimulus package, massive liquidity injection from the US Federal Reserve overnight, trillion plus a day. The House has just agreed on a stimulus package of 2 trillion. So I would expect that to be further bullish for the stock market, which, as this is inverse, this would drop further. And at that point, I'd be looking to get in again for a short continuation. But now, sold out. I did get in a bit early and I sold out pretty much for break even there. I'd prefer to cut my losses, wait for a better entry and look to take it when I have further confirmation and everything more on my side. Next we have SRS, which is inverse real estate, and this was beautiful. I'm really happy with how I managed this, and I would have liked to apply the same to Russell and the stock market in hindsight. Bought a bit early, but see this beautiful break, retest, bought here, market open, and we had this nice push to the upside. Close it this morning, 84%, not bad. Close it this morning though, as price was breaking down, and due to the cash injection and the stimulus package and this basically sort of stability that's coming out from the US Fed and other governments to try and prop up their economies to reduce further downside, it makes sense that you can see these breakouts for wave 1 now coming into a wave 2, or is it a wave 1, wave 2, wave 3, now pulling back for a wave 4, you could argue, and then I'd be looking to take that continuation wave 5. So nice profit on that. Now the SPY stock market, you can see the same thing. Breakdown, now it's starting to pull back. So combining this, once this pulls back and I start to see some deceleration through smaller candlesticks and it failing to push higher, I'm going to start to look to add back to SPXU inverse ETF, because I see the stock market, I don't think it's dropped enough yet, right? It's dropped for 1 month or 2 months from the very high. You combine the increase in virus cases, increased deaths, the lockdowns, the lack of productivity, people being laid off, people being told not to come to work. Like, there's a lot of things, and basically the cogs in the economy are starting to slow down. So, yes, reserve banks are pumping money in, but for me, that's a temporary solution, and I see further drops here. I think when you look at it, the probability of a further drop now, after this 2 months of confirmation, clear lower low, previous low, lower low. I see it dropping a lot further than this, but same thing. That's speculation. You trade what you see, not what you think, right? And we can clearly see that prices come down here and it's now popping the upside. So I sold out, right? I'll take my profit, shut losses, whatever. I'm going to wait for price to pull back here. Nice rejection, then I'm going to get in long. I'm going to have that edge on my side, all the things stacked up to give you that, nine confluence factors to one negative or whatever. The more you have, the better, the stronger the argument. So that's what I'm looking for now. Volatility, I sold here as well. And look, could have sold back last week, but I actually thought that based on market sentiment, this could have gone a bit higher. But to be honest, this was a really, I was sitting around 400% there. You measure from this buy, 400%, 550. Now, if we factor that in, I was a bit early there, even earlier there. If we factor in waiting for that bullish confirmation, remember double bottom, break, clear higher high, previous high, you're buying here, look at the difference. That was 550%, 800%. Now, that's an extra 250% you get just by waiting. And what's even better, not only do you get a better reward out of it, but you don't have to go through this drop. If you don't have balls of steel, you may sell. But I definitely believed in everything, and I just held it. I didn't take a loss here, but see, you can see at one point I was at negative 50%, and even further up here. So that's why it pays just to wait for everything to be in a line, because you get a better outcome, better reward, and less headache, right? Less headache. So sold this, want to take my profit, and also factoring in is the fact that injection in the US stock market, and we know from yesterday's video we talked about the S&P goes up, volatility tends to go down. When the stock market falls, volatility goes up, because this volatility, the VIX, measures the volatility in the S&P 500, right? So it makes sense. Volatility up, stock market down, S&P up, volatility down. So I'm going to sell out. When I see a further rejection on SPY, it makes that clear lower high, I'll then potentially look to reposition myself into this using the profits that I have made from here, right? So say you start with $1,000, you go up, you've 5.5 times that, so it's 5.5 grand. You take your profit, and then, well, depending on what your 1% is or however you risk manage, you then put a certain percentage of your total capital in here and rebuy. And I would expect a drop. Now, VIX, you can see after market closed, post-market, we ended up having this rejection. So did I sell a bit too soon? Will price continue to the upside? But it's just been announced there has been a stimulus package agreed upon in the US between the Democrats and the Republicans. So I would expect that to basically give some confidence to the market. And when there's confidence, that's the opposite to volatility. I'd expect this volatility to drop. So let's wait and see if that comes into fruition. Lastly, I'll touch on defense, which I did talk about yesterday. I did spot buy some of this here at $7.80. I see this at great value right now. Like we talked about it, we've got this 90% drop. Beautiful. 90% off in any shop. If you wanted it, you'd buy it, wouldn't you? And you know, you buy it, like for example, a clothes or whatever, 90% off, that's awesome. That's not going to give you any return, right? Yes, it might be comfortable, it looks good, but as soon as you buy that, you'll never get the same amount as what you paid. Now, if you do that, why wouldn't you buy something for 90% off that is all about giving you a return? People invest for that simple fact to grow their money, right? Make their money work for them. So, less shirts, more stocks. Anyway, that's defense. So I'm looking to target up to this 20 EMA to 50 EMA region. You can see the potential return there. Very, very nice. And I also bought in, as I talked about, to FinTech. One thing about FinTech, it never came as low as the extreme lows, but it came lower than the previous low. So I still like the value. And PIL, which is medical and pharmaceuticals, I wanted to get into this. Unfortunately, my broker didn't offer it. So I will be looking to get into that at a later date. Maybe at the bottom of the market when basically the virus numbers start to lower, curve starts to flatten out, fear starts to turn into the more stability and then the greed, and you'll start to see the price action show this exact thing. A bottom will be formed, you'll start to see price start to slow, and instead of the bearish trend, you'll start to see, no lower low, double bottom or higher low, and that's when I'm going to start to look to buy in for my long-term spot buys of, pharmaceutical. So anyway, guys, that's about it from me for today. Crypto, same thing. It had a bit of a pop based on dollar weakness. Most of these today moved sideways, you can see by the percentage change, nothing too drastic really. I'm looking for further pullbacks against the dollar pairs due to that dollar pullback and weakness. So yeah, that's about it, guys. Hope you're all well as per usual. Take care and hope you're making the most of your time being indoors. You know, there's always a plus side. So anyway, guys, that's it from me for today. Hope you enjoyed this. Until next time, take care. Over and out.